NVDA beat earnings yesterday, but that's one of those things that where, you know what I'm saying, it's really not, it doesn't have, it's not about the results, it's really about the reaction of the market participants. So I'm not really mad about that, but my calls did get obliterated today. Or are we gonna maybe let it settle down a little bit? And are we gonna see the Ponzi leeches coming back and bring this bubble stock back up to new all-time highs? That's what we're gonna figure out here. So looking at the 65-minute chart, and then for bonus, we're gonna talk about Spider as well on towards the end of this video. So looking at NVIDIA here, and looks like about 70% of that down gap, down gap was filled, but not able to completely fill it. You can see that we still have a little bit of that down gap remaining, which is going to be a problem going forward. And also with that down gap, we lost the micro term and the short term and the mid term. So we lost all of these moving averages, telling us that micro, the short term, and the mid term, things are looking gloomy here for the buyers. We are holding right on this pivot right here. That's the 117 pivot, prior swing low, prior swing high. A little congestion here, gapped up. That's 117 level. And that's a potential level of support, but as of today, we're not seeing much of evidence as of today, as of close, that that's going to be a strong level of support. What I've also done, I went ahead and did a little fib work here. As you can see, some of those little dotted lines here, basically I measure it from the recent swing high and the August low right here. See that right here, and you can see my fib retracement zone. You see that 115, 111, 106. That's my fib retracement zone. So basically what fib retracement zone is all about, basically, as you can see, we see that correction, market got up, and it must bounce any of these levels for it to become legitimate higher low for this uptrend to continue. If we lose, theoretically speaking, if we lose the Fibonacci retracement zone, the last level is about 106 here, and we do something like this, then this entire thing is no longer valid for potential higher low, higher high sequence to establish that uptrend, right? We have to kind of scratch everything. Let's say if this thing comes all the way back down to the low, we sort of have to scratch everything because it lost all of that moment. That's what Fibonacci retracement helps us to gauge that. So that comes about, you know, if I draw a little box here, it comes about like somewhere right here. But what I really like about the 50% retracement zone is you can see 111. That's a level coinciding with the up gap area. As you guys know that I like to track gaps. You see that on this day, this is where we closed. We opened here. There's this gap that's still remaining open, 111, 110. So we'll call it a 110 zone. This 110 zone is kind of the level that it's catching my eye here. There's going to be a level of interest. This is going to be the vicinity, and if this up gap is protected, if bulls can defend this up gap and this up gap does not get filled, which again the 50% is kind of just right on it too, right? You know, just protecting that up gap as well. So let's say we do something like this, we come to that 111 area. That's a level of interest, and I think if we do get there, you know, we'll have to understand. We'll see where that oscillator is gonna be. Oscillator currently, we're getting to that bottom of the span. We just hit that oversold zone. We're just right on it. We just hit it. The pink line is extreme oversold. So bears actually still got a little bit more room to move. They can push it if they want to push it all the way to the bottom of the span. That's usually what happens during a downtrend. where bear's gonna make sure to bring that oscillator all the way to the bottom of his band, but it's not gonna. You see how bulls fail to bring that oscillator at the all the way to the top of his band, and that's how these lower highs are made. But once we got into this strong bullish rally, you see how the bulls were able to bring that oscillator here all the way to the top of his band right here, as you can see. And you see how it's adamant. It stays there. It doesn't quickly crosses back down. When in a strong trending market, you'll see that oscillator stay at the top of his band. It can stay there for, week or so, as you can see right there. And so now that this thing coming down, and if that oscillator comes back down, let's say, and hits the extreme oversold, and then when it bounces back up, and then it starts doing one of these, like here, not able to go all the way, bring it all the way back, then that might be sort of that early signal that, hey, you know what, bulls are losing its momentum, and some of these moving averages going to act as resistance. We might have, at least in the midterm, downtrend there. So I think 111, 110 is the level. I'm still holding my calls on NVDA, and I'm sort of wondering if I should buy more here. Well, it's going to be depending on how it gets there and the oscillator sentiment, all that stuff. Let's go to Spider, though. Let's go to Spider, because we haven't looked at Spider in a bit since last Tuesday. I've looked at NVIDIA, so we didn't look at Spider. So quickly, Spider did not fill the all-time high. Do you remember this Boss Bear Command Center at 565? I mean, it got hit, and majority of that real estate has been reclaimed by the bulls here, but still it's not fully filled, and things getting. I mean, we're not seeing this market totally tanking, at least on Spider. What we're seeing is it's just consolidating, and there are multiple attempts from the buyers to fill that down gap completely. You see that how many chances were there? 1, 2, 3, 4 chances not able to fill the entirety of that 565 down gap. If that down gap doesn't get filled, we could still see some shenanigans to the downside. That's probably the reason why we see this up gap. Look like bulls are on its way to finally fill that all-time high down gap, but it didn't. You see how quickly we lost the micro-term. We're right on the short-term moving average now, and just kind of hanging out here, as you can see, and just right on this 556, 555 pivot. That's current resistance. There's a swing high there, and then swing lows here. So I think even if we lose 556, I think for the buyers, you see that midterm, follow that midterm dotted blue here. Midterm is coming up here at 554. So even if we lose at 556 very, very quickly, we're going to hit that midterm, which is going to be the next level of support. So, I mean, overall standard, the overall, you know what I'm saying? The trend is still bullish. Just that bulls are not completely dismantling that Boss Bear Command Center all-time high down gap at 565. Because the down gap is not fully filled, we're zigzagging here all around that micro term. So if we do see, and because there were several up gap attempts, you see that up gap this morning failed. There's this up gap here, failed. There's this up gap here, failed. There's this up gap here, failed. There are like several up gaps that's been failing, and that tells us that if we do see actually down, because you see there are up gaps, that those up gaps are not seeing any sort of legs. If we see a down gap, and if people are buying in this vicinity, these people are gonna panic like hell if we see a down gap, and we will see micro to short-term panic selling. We might even lose the midterm if that's the case. If it's just sizable down gap, that could potentially see this thing coming back down to 548, which is this up gap, which is a stronger support. anyway. And if I do a fib, I don't even have to do it. If I did a fib from here to here, just kind of like how I did with the NVDA, this is where we're gonna see fib retracement coming about is 550 to about 535 or so, which is gonna be important level. You see my long-term moving average right here, and we got two gaps here. But again, this vicinity, I think 548, 543 up gap. That oscillator, however, you know, this morning it looked like a little double bottom. Remember what we talked about on NVIDIA, how, you know, in a bull trending market, bears are failing to bring this oscillator all the way to the bottom of its band, and bulls are putting that oscillator at the top of its band. Remember I said, so a little double bottom, it looked like it was breaking out. So we had a really good, buyers had a really good setup, really good setup to have that oscillator breaking out, and then protect this up gap from this morning, and then go ahead and fill it, and then maybe continuation. But because we failed, the up gap is filled, the oscillator is still favoring the buyers for tomorrow, just the way it closed. But again, bulls need to dodge a down gap. If we can sort of hang around here, possibly that oscillator might do something like this. So bulls need to trying to not allow bears to see a sizable down gap. Like a little down gap is fine, but sizable down gap, 556 is the level. So it'll be interesting how it plays out. Also, remember we talked about the weekly candle. We talked about in the last video, the weekly candle, how it's going to shape this market going into the month of September. So that weekly candle is going to be important. This is the daily chart. Also, you're going to be combining with the 65-minute and daily. So we've sort of, you know, this week, we've sort of understood that this week we're going to see a sideways type of market this week. The reason is it's starting to looking extremely similar to back in May. Look at that oscillator, where that oscillator is. Look at that oscillator, look at that where that is. So you see how we see that pull back, right? To the midterm, oscillator crosses back. This is daily chart of spider. Oscillator crosses up, it goes up. Oscillator goes with it. And once that oscillator hits the extreme overbought zone, what did the price do? It moves sideways for about a week and a half to 2 weeks before hitting that short-term moving average, right, on this daily. And then we saw another leg higher. So what happened early part of this week and late last week, we came to a conclusion with my mini members, because that oscillator is overbought, similar to May, we're gonna see 1 week, maybe 2 weeks of sideways move, and then possibly retesting that micro term. So we actually coming into this week, we sort of understood the fact that there's a great chance, a higher chance that we're gonna see you know, a sideways chopping market this entire week. Also, yesterday what we talked about is that we retested micro term for the first time on this daily, and that's what happened back in May right here. Look at the micro, that's a squiggly aqua line. You see that's where it retested it, and then it retested. You see how for 2 days it stayed up above that micro term that's back in late May. So yesterday, when we hit that micro term here, you see that micro term again, that's micro term right here, boom, comes back down to micro term, and we thought, okay, it's very interesting that it's actually been playing out almost exactly similar to May. But really, the real objective is really to sort of like, okay, you know what, this is a sentiment. This is what we witnessed where, you know, in May, we saw market grinding, chopping for a week and 1 week or 2 weeks. And we might have something similar coming into this week. And then with that micro term getting tested right here, we felt like that might be the case going into today, which we you know, at least as of close, we're still holding above that micro term.